To our panel, Liz Peek, a columnist for the Fiscal Times.com, former Indiana Congressman David McIntosh, now the Club for Growth president, and Kyle Pomerleau, the Tax Foundation Federal Projects Director. I got to start with you, David, because I read a piece, and even before it was revealed, you were so enthusiastic about this. You're saying it's going to kickstart a sluggish economy, it's aggressive, it's very pro-growth. Are you talking your book for businesses, or is this really going to help the average American?
I think both, Charles. And we were briefed today by Vice President Pence, and I have to tell you, this is a tremendous pro-growth, pro-job tax cut package. It will help business. We've seen a prediction of a 10% further increase in the market because of this, but it will also help the average taxpayer. Doubling the standard deduction means that so many people get to keep the first $25,000 of income they earn without Uncle Sam taking a dime of it for income taxes. And that's a huge break for middle-class working America.
All right, Liz, the thing is, a lot of people are saying this is a GOP wish list, that we know it's a framework, it's an outline, but you're happy with it as well. Is it too much? Is it too grandiose? Is it too optimistic?
Well, I don't think so, because the issue it has to pass through reconciliation. I don't want to get into the weeds on this, but it has to basically not have increase the deficit beyond 10 years. So there's some give and take in this thing. They are talking about raising rates, for example, on the wealthiest individuals. That's not part of the GOP wish list, but they may have to give that up to get to where they want to go to. I think the real message, though, this is about jobs. Yes, it's about tax relief for middle-income Americans, and they need that tax relief. But it's not just big companies, it's also small companies. It's to allow corporations to put more money to work in the United States. We are missing, in this last 8 years, a big surge in business investment. That drives productivity, that drives wage growth. So there's a lot of reasons why it's good for America and should pass.
And by the way, today we also saw where durable goods business orders are going through the roof. So businesses are already acting on that optimistic.
Yeah.
And Kyle, the Tax Foundation has done some exhaustive work on this. I'm glad you joined us tonight. There's some skepticism, I suppose, though, when you guys crunch the numbers about the ability to get to all of the things that are on the wish list.
Yeah, so I think the plan is a really good start. I agree with what's been said so far about the lower business tax rates are going to boost the economy. The tax structure is going to be simpler with no alternative minimum tax, no estate tax. But I think that there is a lot of work that lawmakers need to do to make the numbers work, especially to hit that reconciliation target of neutral at the end of 10 years. So they're going to have to look at which itemized deductions they're going to pare back. They're going to have to look at which business tax expenditures they're going to have to pare back. But I do think that at the end of the day, this is a framework that could work if lawmakers were willing to really look and see which loopholes they're willing to close.
You know, David, on that note, as the process was evolving, we saw gimmicks like the border adjustment tax. We saw a hint that perhaps they would take away mortgage interest deduction. All of these things so that we could afford to give big business a tax break. And there was some serious pushback on that, particularly from the heartland. I mean, if you talk about the folks out there that elected President Trump, they're saying, again, why should these Fortune 500 companies be the focus of this at my expense? We've been lucky enough that we avoided those. But if Kyle is right and you guys have to sharpen your pencils more, I'm worried about these gimmicks creeping back.
We're going to have to watch for that. Let me tell you one thing we watched for and we're really happy with today. There's a 25% rate for small businesses. So the big corps get 20. The small business on their personal taxes get a 25% rate. That will be huge for job creation. It will help middle class, middle America really see the benefit of this tax cut. And we're going to have to fight to keep that. But I think we will. One of the things that in talking to Vice President Pence, he realized that this has to be a tax cut not for the boardroom, but for Main Street, that Americans will see this is what's going to put us back to work. I think Liz was right. It's productivity, it's job creation. One of the numbers we heard today is it'll get growth to 3%. That's $2.7 trillion of added revenue. That more than makes up for the $1.5 trillion they're talking about cutting.
Right.
So it's easy to see they're going to be able to make the revenue when they cut the taxes.
Although, Kyle, you're saying the real cuts that may add up to maybe $5 trillion, and I've read even reports of $7 trillion. So it's good to have a guideline of $1.5 trillion, but they may exceed that right now as it's written.
Correct. And they'll have to, and I think that they're thinking about this in the right way. They're not looking to raise taxes on individuals to pay for business tax cuts. One of the base broadeners that's on the table is limiting the interest deduction for businesses in order to bring that rate down. That is, businesses paying for lower tax rates on businesses, so that would be good. But
right.
yeah, if they're going to hit the $1.5 trillion number at the end of the day, they'll need a little bit more than economic growth. They will need to look at some of these base broadeners.
And no one's talking about spending cuts anymore. I guess that the Republicans aren't concerned about that at the moment. I mean, really, honestly, I'm not being facetious. Is it really about jump-starting the economy, getting a bunch of money in the coffers of Washington, D.C., through good old-fashioned elbow grease, and then addressing the deficits? I mean, essentially, that's what we're talking about here, right, David?
Yeah, they're going to do some spending cuts, but look, if they just put the brakes so they don't keep spending like drunken sailors, that'll help us get to a balanced budget on that.
Although you're insulting drunken sailors because they do earn their own money, right? Let me ask Liz this. Now getting the President Trump went to Indiana because a similar tax cut worked there. It's the heartland. And he went there to use it as a launching pad, but he's using it as a launching pad to sell to the rest of the country. How do you get these terms? How do you say that we're going to, give these big tax breaks and somehow connect the dots that ultimately, though, this means that you'll have more jobs in your community and higher pay? How do they articulate that?
Well, I think Indiana is a very good example of that, right, where they really did, under Mike Pence, put through tax cuts and, in fact, did generate a lot of job growth. Look around at comparable states nearby, like Illinois. There's just no comparison. Indiana is a winner. So I think it was a smart place to go. But I think what we have here, Charles, and what's so much better than the health care rollout is a unified message. Everybody is talking from the same signboard for once in the GOP. Even the Freedom Caucus came on today and said they would support this thing. People understand that how do we get beyond the deficit issue in our country? Growth. That is the only way that we satisfy our entitlements, obligations, and also bump up, basically begin to increase tax income, which, by the way, will increase.
So the bottom line is that we're talking about the same wave of prosperity
that's
will touch everyone's life.
Absolutely. And the governments, I mean, they need the revenues.